Hi, good evening. Today is Wednesday, June 16th. S&P 500 has traded in a really tight range overnight, unusually narrow range, less than 10 points most of the time. And we finally sold off another 10 points on the open this morning in anticipation for the Fed announcement, which didn't disappoint insofar as it has created volatility. The original statement from the Fed said that most officials now expect the rates to be raised by the end of 2023 rather than hold them near zero. The median projection shows 2 rates increases by the end of 2023. And that's sooner than they anticipated at the last meeting in March. As the economy, they claim, recovering rapidly from the effect of pandemic, and inflation showed up a little bit. They also have discussed tapering as well. And so markets originally didn't like it, and we sold off on this news to 41.90 or around 35 points. It doesn't sound so dramatic, but given how low the realized volatility actually has been for 2 weeks, it looks more dramatic than it actually is based on the last 2 weeks volatility. But of course, as expected, Fed also backpedaled. Who can blame a man who wants to keep his job, right? And he said that the projections do not represent a committee decision, and the dot plot and the dots on it aren't a great forecaster of future rate moves. So we should take them with a grain of salt. So of course the market took the grain of salt and ran with it and pretty much recovered the whole sell-off from the original Fed announcement, and we traded to 42.28, which is the level that I would be watching for us to get back to a bullish, for the market to be bullish. I think we need to trade above that.
Well, so it's a different story right now between ES and the SPX, where the SPX closed. ES is down at 42.02, but
right,
it's
we
pretty
sold off a
typical to
lot
have this
after
kind of
hours, after the close, right?
right. This is pretty typical to have this kind of carry through, and it's also very common to then have a rebound in an overnight session, and that this isn't. I mean, that tends to open not very, or tends to end up not very far from where the SPX actually closed. So, so it's and we're seeing a little bit of a rebound here, a very gentle rebound, but it is below this volatility trigger level, which isn't predictive. It's not saying that it must go down, but if it opens below, if SPX opens below this level, then it would suggest that we're going to chop around a bit and we'll have increase in volatility, which might not be that unusual given that that the volatility has been so low for the last several weeks, and we have a sort of the revenge of volatility coming back to haunt us for a week or two while it adjusts what the Fed is saying today.
Right, and so if the volatility continues, we could sell off to maybe down to 4,100, and that's could be a very good buy level as well. But the bonds also sold off today, and so we have now 2 red days in a row, and that usually has bullish implications according to Victor and his testing. Not necessarily the next day, but in the next couple of days. So bonds sold off, and so far looks like the breakout that we have experienced 2 days ago was a fake out, and we'll see if that sticks or if the bond continue to go down.
Right.
What was interesting today was the dollar index. The dollar index had quite a rally on after the Fed announcement, and it didn't come back. It didn't revert back, and it had a very nice, I think, around 1% rally today. today and looks very bullish even on daily and weekly charts. If that doesn't fade, it's we have this $90 level, 90 level rather, defended, and if the dollar rally continues, that could be like a little negative for all the multinationals companies and Nasdaq, given that lots of their revenues are from overseas.
I would say at this point it's kind of a technical bounce that we would expect to see at that 90 level. The real level I think that's being defended is around the 88 level on DYX, and if it breaks that, then it could that could be pretty bearish for the dollar. It is near the end, low end of its range over the last few years, but it has been below the 88 level just in the last several years. So it's not unusual to get back below that level, but it would be a bit more bearish for the dollar if it's not able to stay above, let's say, the 88-90 range.
Powell also talked about the inflation, and he's still in inflation is transitory camp, and he thinks that inflation actually could be quite low going forward. And while looking at all of the commodities last couple of days, we had lots of them selling off, partly because China started selling off their state stockpiles to reduce the commodity inflation in China. And so gold today was down to 2.75%, 2.25%. Copper was down as well. And in the last couple of days.
It's not necessarily bearish, but it was a pretty bearish day today. So it sold off right along with the rest of the market, but maybe a little bit steeper, quite a bit steeper than the rest of the market. A good 2% down in silver, and then 2.5% gold. So some of this is a little bit of this is there's been a really nice rally in precious metals over the last several weeks, and I think a bit steeper pullback from this pretty much goes back to the breakout level almost in gold, and maybe not quite that far in silver, but it does go back to that, retest that breakout in gold.
Lumber actually is about 40% of the highs. I guess they finally found some trees to chop, and now the lumber is prices are going down, and we had some also, maybe because of the lumber cost or what, but lots of home builders came in below expectation yesterday. So it looks like home builders are having trouble maybe building because of the high cost of the materials and finding people as well. So the permits application was down and stuff. So
right. Well, the however, copper, although it was a huge sell-off in lumber, it went right down to its 200-day moving average on the front contract. The copper sold off, but not more in line with other precious metals and not in line with lumber. So,
well, copper could be just the beginning of the down move. If, like I said, if the dollar move continues and the inflation expectations have been a little overplayed, so perhaps the economy is not going to be as hot as the commodities were hoping or predicting. My guess is that the commodities and copper will continue going down, and the inflation would be not as high as the previous readings we had a couple of days ago.
I would say that's certainly a possibility, and that's what I think the market is saying actually, and I think that if that's the case, then we'll see a sell-off in stocks because a large part of what has been what the underpinning of the rally has been an inflation thesis.
But let's get back to the fun stuff, Bitcoin and other. Michael Saylor keeps messing with Bitcoin and tweeting constantly. He said, I think yesterday, that if you only invest 5% of your portfolio in Bitcoin, you have made the decision to invest 95% of your portfolio in assets getting demonetized by Bitcoin. So he's saying that you should just go all in Bitcoin. And I guess that's what he's doing by issuing all of the bonds to buy Bitcoin. So I don't know how he's trying to just distract people from the losses that he has to realize now on the Bitcoin sell-off.
Yeah, there are let's say a certain breed of enthusiasts that goes beyond just the, this is a nice portfolio enhancer, diversifier, or some other strategy within a broader portfolio strategy, which is what I think you have to look at it in. What was your risk reward profile that you desire for your whole portfolio? And crypto probably has a place for most people's in most people's portfolio, but a much smaller allocation than 95%.
Right.
So, but I think what's happening right now, we had a pretty sharp sell-off today. Not in crypto terms. I mean, 4% is not a big deal in crypto. It's kind of like just normal days movement if you look at the chart. But today, I think it was just a pullback in sympathy with stocks and other risk assets, and wasn't really. I wouldn't consider it anything to be concerned about. It may actually, if stocks continue down, it may retest this breakout above the support, and that would be pretty bullish. If it bounces there, if it plunges through for some reason, then we're back in that potentially bearish territory. But we did rally pretty nicely yesterday in Bitcoin, and it went to the high 42,000. So I expect a lot of some continued attempts to breach that 42,000 level that are going to be unsuccessful. This is similar to what we saw yesterday, and where it'll then sell off after failing to reach that level. But eventually it'll make a serious attempt at 42, and that's the real test, I think, for Bitcoin right now. I continue to think that Bitcoin will be the strongest of the cryptos, of most of the cryptos, over the next few weeks. And I see, like looking at things like the Bitcoin or Ethereum Bitcoin ratio, I see this kind of gently falling over the next few weeks. Not the sharp drops that we've seen, but just continued erosion until Bitcoin sort of stabilizes, and then we'll see a rally in this again. But I see things like Ethereum as just being a little bit weaker than Bitcoin, not necessarily being weak, but certainly being weaker than Bitcoin in the near term. Ethereum right now is at a kind of at a support level, and I would say both Ethereum and Bitcoin may bounce here over the next few days if stocks recover. But if they continue down, then probably we'll continue to see a move down. It's driven by other things at this point, not internal to crypto.
Right. Yeah. To me, Ethereum looks like it's in this narrow triangle range, so it's likely to break out one way or the other. It's getting very tight for Ethereum, given how it likes to move. So.
Right. I would say that it's pretty much the same story across crypto right now. That it's just that very similar looking chart. It's mostly being driven by Bitcoin right now, because Bitcoin is it's near the start of I'm not saying we're in the resumption of the bull market, but it's closer to the start, and this is where Bitcoin typically will lead the market.
And Dogecoin, same way. It seems to be stuck in around 30 cents and not moving. So I'm looking forward to it trading at 10 cents soon.
I think that it's my own view is that it's done for this cycle, and I don't mean it's going to crash to zero or something like that. That the one thing about crypto is there's an amazing life to some like these kind of zombie coins, like in my view something like Litecoin, which has been around since 2014, but it or sorry, before that, 2011, but it never really gained. It in bull markets it tends to gain some momentum player appeal, and each rally or each bull market that's been less and less. So there's much less fervor around it than there was in the last cycle, which toward the end of that cycle, the original founder of it, Charlie Lee, sold all of his Litecoin and decided to give the money to charities and so on. But so it doesn't really have, although there's still a community around it, it doesn't have, it's less than it was in the past. But I see something like Dogecoin, it's probably had its run this time around, and I could see it maybe participating in rallies, but not really the nothing like what we saw earlier this year. And so people that are buying in at this point are probably going to be a little disappointed. That other crypto is outperforming Dogecoin, is my view. So I would say that we're in a little bit of a in crypto at least, we're in a little bit of a transitional market that we've seen. I think we've seen recovery of some of the momentum stocks, and that's very much in line with if there's a little bit more of a risk on tolerance, then we'll probably see a continued rally in some of crypto, especially in Bitcoin, in the near term. But if not, if there's just a risk-off attitude, which I actually don't see that as being in the near term really where the market's going. But I could be surprised and be wrong on this. But that's my view, is that risk on is still the trade here at least over the next several weeks. But I did open a position, whether it's not that I recommend other people do it, but I did open a position in cocoa during its sell-off over the last few days. And
do you have a chart for that?
Yeah, let's look at that. So, and
do you only trade things that start with a C? Cocoa, crypto?
Yeah, I guess.
You need to diversify to other.
They're very different markets, and maybe in contrast to crypto, something like cocoa hasn't moved at all really over the last year, and it's sort of been in this trading range, and but what really is a big driver is that a lot of most of the cocoa business, or most cocoa is grown or in tropical countries in South America to some degree, but really in Africa. And so any kind of disruption to supply lines causes these periodic rallies that you see, and so it's more of a trade, a play on one of these supply shocks, which we've seen across a lot of commodities, but and so we're at a low level within this trading range. So that's my my near-term thesis, but it of course I could see it rallying much higher than this let's say 2640 range, depending on what the situation is with supply, which there's some indications that it's much more supply constrained than the market reflects right now. I don't know what just flipped around, but we're not looking at cocoa right now. But cocoa hasn't moved very much, in contrast to crypto. But I think it's an interesting trade at this point. And so unlike a lot of commodities, it really hasn't had the sharp rally that some other commodities have had over the last year.
Right. And speaking of commodities, steel and X sold off today as well, 4%. Alcoa was down 2.5%. So
yeah, really the whole cyclical
right.
complex was down really big today. All these stocks tend to be pretty interest rate sensitive because they have a lot of debt. So compared to other businesses, they have a lot of short-term debt, and so they do have interest rate sensitivity.
So an inflation play as well.
They are certainly because they obviously have more finished product. So like U.S. Steel, they make more steel pipe, and so it's in part maybe a kind of ancillary energy play because of what they make with their steel, and but Alcoa is more of a general producer of aluminum. But then really across the board, we saw a sell-off in all the cyclicals, energy stocks, and so on today. So
Well,
I don't.
Quite a rally from $5 to 45.
Oh yeah.
Before, I mean, as the pandemic hit, to 45 now. So
right. Well, but let's say U.S. Steel, for example, was above 40 as recently as 2018, and what didn't happen in 2018, there was a lot of bullish anticipation because of the steel tariffs and aluminum tariffs being imposed by President Trump, and that ended up being the exact top of those markets. It was not it was not bullish. It was just the opposite. And so we have seen, we first saw the sell-off and then the acceleration of the sell-off because of COVID, but I think the economy is recovering, and these rallied pretty sharply in response to that. Well, thank you, everyone.
thank you.
See you on Friday.